July 10th, 2019, guys. Good morning. Focus. Write this stuff down. We're going to go for it super fast. Guys, markets are going to hit all-time highs today. It's going to be nuts. It's going to be crazy. It's going to be all over the news. Remember, patience pays off. So congrats to you guys that stick with this bullseye trade. Do not jump out today. This is just the beginning. Guys, the market has already made up its mind about the Powell speech. I had a lot of guys reach out to me over the last few days. Well, what if he messes up this speech? What if he raises up the rates? Guys, what we are witnessing on the charts is that the markets already know what he's going to say, or they know how they're going to react to what they're going to say. All these institutional investors control billions of dollars. They're buying every dip. So they've calculated that whatever Powell is going to say later today or tomorrow is not going to impact the markets negatively. Yesterday, look at this chart. We're going to take a look at it in just a second. Look at this crazy volume going into the stocks. In the last 30 minutes, this crazy buying behavior, this FOMO behavior is surfacing in 7 days out of the last 9 trading days. Guys, this is amazing. So historic analog precision increasing even more after yesterday. Amazon breaks out officially yesterday, guys. Amazon breaks out of a cup and handle. I'm going to show you the chart and what to make sense of it. So actually, this is what we are expecting. This is going to be the catalyst for Amazon stock to go even higher from here. Expect analysts to come out on TV over the next 72 hours and say, hey, we're raising price targets on Amazon to $2,500, $3,000. I'm sure there's going to be some goofy guy that's going to come out and say, hey, Amazon is going to hit $5,000 over the next 2 years or something like that. But these target prices are going to put together $2,500, $2,600. They could be very realistic over the next 90 days. I'm going to show you why. Apple bounces above yesterday, above 200, and actually holds this level pre-market so far as I'm recording this. Guys, expect the FANG trade to catch up. All the FANGs are about to go through the roof. They actually raised the target price on Netflix, not substantially, like $380, which is important because this 380 level in Netflix is crucial. Once it holds solidly above 385, there's nothing but upside for Netflix from there. And the shorts are going to be covering Netflix because the popular trade, guys, the popular trade has been short Netflix by Disney. That's what everybody on the street's been doing. But now that Netflix is actually going to attack this level of 385, 390, and it's going to break above that, we could see Netflix at $450 here in the next 60 days. So with that said, what could actually propel Netflix to hit 450 even sooner, like in the next 10 days, of course, is the earnings report and the fact that the shorts are going to be cut in this messy short covering. So just keep that in mind. The FANGs is the best trade in town yet again. Real quick, also the upgrading. Look at the retailers. I got these in parentheses, guys. Helen of Troy bounces on a crazy report, right? The expectations have been lowered so badly that it had no choice but to actually beat the expectations, which in a way is a retail stock. And Costco gets another upgrade today. So when we see these retail stocks doing well on a relative basis in relation to some other things, it tells us, look, retail sector is about to be hot this summer. What's the biggest retailer? Amazon. Well, really, it's a cloud play, but all the cloud stocks are hitting all-time highs. So the shorts are screaming. We got our shorts on the cloud plays a month ago, but there's plenty of people that actually stayed in the shorts on the cloud plays, and this big short covering is about to take place, which could get us on S&P 500 easily to 32, 3,300 quick. So Google, I love this Google. I forgot to insert, just didn't have time to insert the slide. We're going to talk about the Google. Google's got a really cool pattern, which happens like once in 100 years. It's got the reverse mirror pattern, and I guarantee you guys can Google this shit anywhere. You're not going to find this reverse mirror pattern anywhere because it is one of our proprietary top secret material. So if you want to get on this James Bond-like trade, pay attention to the video tomorrow. Tesla is about to rally back to the 250 level, currently trades pre-market at 234. We're going to take a closer look. But most important, right? Cup with the handle, guys. If you're trying to understand the charts patterns, boom, this is the deal right here, guys. This is the most important thing. Look at these thin green line right here. And look what actually took place yesterday. So out of these cup with the handle pattern, we just got above this level that was created back in May. Now this level is referring to the breakout point, or also known as the buy point, represented by this orange dot. And there's no other way to look at it or confuse it. This is the real breakout because it's supported by the volume. Every time in the last 7 days, look at this pattern in volume. The volume keeps increasing on the buy side. Yesterday being the highest volume over the course of the last 3 weeks in Amazon. So when stocks break out of this cup with a handle formation on stronger volume, this typically leads to something that you guys are not even going to believe. This typically leads, real breakouts with cup with a handle lead to 20 to 30% breakout within 60 to 90 days after the buy point, after this little orange point that I just shown you. Little translates about 400 to 500 gain. And interestingly, that would coincide with what I believe is really going to take place in the next 72 hours. All the analysts on Wall Street are going to be upgrading their price targets on Amazon. So stay with the trade. Bottom line, it can hit 2050 by Friday, so stay with the trade. The same behavior we've identified a few days ago and described it in the videos, it's still there, guys. It's not going anywhere. We just keep getting more confirmations. We keep getting more confirmations. We're supposed to stay with it. This was a snapshot from July 9th. Boom, we said when it opens up, it's going to open up lower than it closed the previous day. That's your buy point. Buy in the morning, sell at night. When the stock gets to about 3 p.m., 3:30, this nothing changes, right? Yesterday, we actually had the highest ratio from the standpoint of the pre-market dip compared to the bounce. So dip, bounce, dip, bounce. This relationship is about to actually accelerate. So this behavior, which we've called this behavior, buy in the morning, sell at night, right? It is there, and it is likely to continue for a number of days from here, at least for another week, guys. So very exciting stuff. Stay with your calls. Don't be freaking out. Oh, I'm making some money today. Let me get out. Stay with your positions. Guys, even like this, I mean, look at this bullish flag on Tesla, right? I mean, when your worst stocks are going higher, it tells you that the market is in a 100% bull mode and nothing can stop it. So just be a bull and, run on this Tesla trade. So far, pre-market trades at 234, reasonable around to 250. That's easy. That's in the making. Our histogram, we're not going to spend a lot of time on that, but we are on this day of a breakout. Today, tomorrow, we are actually going to be right here. Let me zoom in a little bit so you can see this a little bit better. We've talked about all this stuff in the last few videos, guys. So this is the point we're breaking out. Notably, we are going to have some huge volume come in based on our historic analog from December 2017, January 2018. And this is what we're about to see with the market. So get ready. It's going to be fun. Fun, fun, fun. Guys, not time to buy the puts. Not time. If you're buying puts, it's no fun. And I knew I should, man, why did I even describe this Helen of Troy trade yesterday? Those of you that have been with us for some time, you know we do not like to buy options ahead of earnings. I know some guys did anyway. So the stock pops. There is a probability it's actually going to drop slightly. But at this point, we're not taking this trade based off everything bullish in the market. We're not adding puts. We're not doing anything on this particular trade. So that just proves the point, guys, that you should not be getting yourself in a situation. Certainly shouldn't be risking much buying contracts ahead of earnings. You should really wait for the initial reaction. So what's going on with this move in the S&P? We are going to break, and at least we're going to touch this level of 3,006 today. And tomorrow we can open with a gap up higher, meaning like 3,025, maybe 3,030 on S&P. That is what's in the cards. This unfortunate Helen of Troy. You know, sometimes when you look at the charts and they just look so freaking terribly bad, they look so bad. Things just cannot get any worse than what they look. Okay, sometimes it's just better to wait to see the initial reaction after the earnings. And so apparently in this particular case, the expectations have been lowered so ridiculously that the stock had no choice but to actually beat the earnings. With that said, market move 8 yesterday, 8. Within the first hour and a half, 2 hours, the markets actually go from negative to positive. That is the characteristic of an 8. The interesting thing about the move 8, the most crucial thing about move 8 is actually always when you look at the chart, it is an in-between move. In other words, that is a bullish move that is surrounded by 2 bullish moves. In other words, move 8 is preceded by a bullish move, and the following day after move 8, there's a 90+% probability of a bullish move. So today, going into today, guys, we're highly bullish because of that sequence in the market formula. So this is how the move 8 looks on the 1-day, 1-minute chart. Yesterday, the most important observation, again, is this behavior of buying in the last hour is back. Look at the volume on this entire chart from yesterday when this move 8 was formed. Where is the biggest magnitude of the move? It's right here in the last half an hour. And where is the highest volume? The highest volume is going in right into the end of the day. So let me tell you this. If institutional investors were freaking scared about what Powell was going to say, would they really be doing this? And the answer is no. Why would they be committing billions of dollars in the last half an hour going into this potential Congress, Senate testimony of Powell that could have produced something grossly negative? So you don't see this when the market does not expect something good. All right, market move 2-day sequence is 12-8, both bullish move. Both bullish moves, guys. This is how they look. Now, interestingly, when you look at this, this is a 2-day, 2-minute chart. So you got the smiley face tells you, hey, it's okay. There's no crash here. The market is not going to drop even though the markets are in the negative. Here's your move 8, highly bullish move. But look what you got right here, right? This behavior of reverse head and shoulders just completely dominates the market. So when we're looking at this 2-day sequence, 12-8, look at what's here. I mean, you can't miss it. Here's your another reverse head and shoulder. And if you actually combine this, this is kind of a bigger move 12. It's another smiley face says, hey, smile, be a bull, don't be a bear. Get on the right side of the market. Guys, I'm actually going to be posting the video about patience and being on the right side of the market. I'll send you the link, so make sure you check it out. I'm bringing some really valuable points there, so I hope it will help some of you out there. Guys, 5-day sequence, 7-7, 4, 12, 8, all in the green. So remember when last week we kept posting videos about the sequence 7-7-7. Guys, after we got these 3 7s, I want you to pay very close attention how powerful this formula is. You're getting, after getting the initial 777 sequence, you're getting 2 more 7s, which are bullish days. You're getting 4, 12, 8. You're getting 5 green days, okay, that are all bullish moves. And this is likely to actually continue. What we're about to get is like a move 1. Another 7. We get in over the next few days. We could get a series of these highly bullish moves with a breakout high. Okay, on a 5-day sequence, this behavior of reverse head and shoulder is omnipresent. Look, reverse head and shoulders, reverse head and shoulders. This was not a reverse head and shoulder. I mean, this was a big move forward where the market erases. This was a huge characteristic of buying the dip. Essentially, reverse head and shoulder is what are they doing? They're buying the dip. So between these formations, like this is what institutions are doing. They would not be doing this if they were scared that the market could be crashing or something like that. So the predominant behavior is buying the dip. We're going to retest the 3,000 level today. Currently, the futures are in the negative so far this morning, which makes me actually highly optimistic because that has been the trend over the last 10 days. The market goes, every time the market has gone negative in the morning, in most of the instances, it bounced by the end of the day, which is a very bullish behavior. So the next market move we're expecting, guys, could be 4, 8, 12, Actually, for some reason, the slide did not update. So the highest probability of the move, in my view, could be another 7 today. I know while I'm recording this, the futures are in the negative, but we could actually, by the time the 9:30, by the time the market opens, we can actually be slightly positive in the market. And with that said, we could get another 7. If the market's still in the negative by the time we open up, we could get an 8. So to me, the highest probabilities of market moves today is going to be either 7 or an 8. With that said, VIX is back to its shorting point, basically pre-market. As I was taking a snapshot of this, VIX is back to this level of 14.6, 14.7. You know, we've discussed that. That's the high end of the trading tunnel for the VIX. Basically, what do you want to do when something is in a trading tunnel and it's the higher range of the trading tunnel? You don't want to buy, you actually want to short. So VIX is likely to drop by tomorrow, maybe revisiting the lower part of the tunnel, which would be 12. So easy trade here. Again, there's plenty of other better trades out there, but this is an easy trade, guys, because your entries are so precise. You can short the VIX here. In other words, buy puts on the VIX. You can cover them once it hits 12. It's a simple trade. Okay, so basically with that said, and this is exactly what happened yesterday, right? We recorded this video. We said, hey, this is where the VIX was pre-market. Yesterday we said it was going to drop, so it did drop. So this was a nice, easy trade if anybody did take that. Again, that was not ultimately the best trade. You do just want to focus on basically buying calls, guys. That's the key takeaway. Just buy some calls. Focus on the FANG stocks. Buy this week expiration, next week expiration, the following week expiration. Just buy some calls and be patient. Buy. Let's go. I'll see you guys in the next video tomorrow.